Hi guys and welcome to the trading show. This week we are gonna talk about
markets. Nasdaq hits fresh record highs. Our portfolio stocks surge. Tip of the week. Breakout on the Bitcoin future. And the weekly rollovers.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. New record for the Nasdaq, which broke all the highs during the week, even if today we see a slightly negative day. The weekly increase is 4.2%, the mini S&P is also positive with 1.7%, while the European stock exchanges are just slightly positive. To report, we have the energy sector with negative returns. In particular, we see the natural gas with minus 10% during the last 5 days. Positive instead metals, meats, while soft commodities are mixed. In particular, we see almost minus 5% for sugar. Cereals are slowing down after the strong bullish trend of recent months. We see in this graph, for example, the soybean future that in the last week has dropped a bit. Finally, we have the Bitcoin, which, as usual, shows us strong movements. In fact, it has lost almost 30% in the space of a few days, and then it partially recovered. Over the last week, however, its return is minus 9%, but obviously it remains largely positive on a 1 month and 3 month basis. On an annual basis, we still see a 213% return. Let's take a look at the volatility that on annual time frame as regards stock indexes remains low, while with reference to the last month, we can also see it from the graph, the historical volatility is growing. On the implied volatility front, there is not much to report. Values are similar to those of the previous week. The market is in contango, which means that short-term volatility is lower than long-term one, and this kind of term structure is characteristic of bull markets. In fact, it is no coincidence that Nasdaq has just broken all historical highs. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week I want to talk to you about a strategy, an allocation strategy on the most liquid 400 stocks of the Nasdaq, so not just the Nasdaq 100 but also the other stocks. And this strategy is a mean reverting system, so it enters when some kind of retracement occurs in these markets. The strategy has also a filter on the volatility, so if the trend becomes negative, so bearish we can say, and consequently the VIX index increase to high levels, the strategy stops operating. On average, this strategy stays in the market for 2 or 3 days, we can say, at maximum, so not so much. And I want to show you how this strategy performed in the last period. The strategy, of course, is long only. Now the portfolio is calculating. Okay, and we can see that the strategy is at its highest levels. of course, because the benchmark, so the Nasdaq has hit its highest level in history. And but what I want to emphasize is how the strategy behaved during the most critical periods, like here in 2018, where the Nasdaq and also the other equity indices were collapsing, and also here in February, March 2020 during the pandemia, where the Nasdaq had a 30%, over 30% drawdown from the peaks, while this strategy had just a little drawdown and then recovered very well. The strategy enters with a fixed size of $10,000 per trade, and we can see that the average trade is around $100, is exactly not around $100, 100.00. So we can say there is the 1% of the value of our position. And also here on the monthly period analysis, we can see how the strategy behaved during the crisis period, we can say. And we can say that, of course, we have some losses in this period, but if compared to the other months, the strategy has not lost so much money. Also, looking at the annual period analysis, we can see that every single year was positive from 2016. And of course, 2020 was a pretty good year with a profit of $86,000. And also 2021 started very well. So we hope that also in the future this strategy will be profitable, but most important, we hope that it will continue to protect us, we can say, from high volatility periods.
Hello everyone and welcome from Andrea Unger. Today we will have a look to the Bitcoin future. So Bitcoin future is a future that is listed on the CME exchange, and it has been quite recently listed because the first listing date was around, it has been listed around the beginning of 2018, if I remember correctly, in January 2018, and the peculiarity of this product is the extreme volatility it has, and in particular the extreme monetary volatility it has. And this, of course, it's due to two different factors. And the first one is the volatility of the Bitcoin itself, and a second factor, of course, is because of the size of the contract. In fact, the contract unit for the Bitcoin future is of 5 Bitcoin per contract. So this product, I think it's reserved for very extremely capitalized traders and extremely expert traders, because of course trading this kind of products may lead to incredibly high losses. So the trader may have to face very big losses or very big gains in some cases. So only extremely expert traders should trade this kind of product, and they must also be well capitalized because of the size of this contract. So as we can see from the CME group website, as said, the contract unit is 5 Bitcoin per contract, and the quotation follows the CME CF Bitcoin reference rate, so the BRR index. And the session is pretty the same as all the others, most of the others CME products. So it starts at 5 p.m. Chicago time and it ends at 4 p.m. Chicago time from Sunday to Friday. And as we said, the size of the contract is 5 Bitcoin, and as a consequence, the minimum price fluctuation, so the tick value, is $25. But now we go to multi-chart, so to my platform, and here what I've done is I have plotted the average true range at 5 days, and then I've multiplied the resulting value by the peak point value. So what I've gotten here is the average monetary true range. So the monetary average true range within the last 5 sessions, that is approximately 1 trading week, just to discover the monetary volatility among this amount of time. And as you can see here, the values are extremely high, and this is the reason why I suggested to trade this product only if you are a well-capitalized trader and at the same time also an expert trader. And I've never seen some similar values on other products. So as you can see, most recently the monetary volatility, the daily monetary volatility, goes over $10,000 per day, and it has arrived at some peaks around $30,000 per day. That are extremely high values, of course. So you have to pay extreme attention when you decide to trade this kind of product. But now let's try to see which are the main characteristics of this underlying. So I've never studied in the details this kind of product because it's quite young, and so I have not so much data to create diversified or so many strategies. So what I've done is just to try some very basic triggers, and in my opinion one of the best one was the channel breakout strategy. So here I have plotted for you Donchian channel that is a quite popular indicator, and in particular I had set this kind of channel on 50 bars. So what you will see are 2 bands on the chart, and the first one, so the upper band, is built using the highest high within the latest 50 bars, while the opposite band, so the lower band, is built on the lowest low of the latest 50 bars. And the strategy is quite simple, so you go long once there is a breakout on the upper band, and you go short when there is a breakout on the lower band. So it's a very simple stop and reverse strategy. By the way, here we can see the equity curve with drawdown of the strategy, and you can see that there is a certain consistency all over the years, even if of course we have just 3 years of backtesting, because there is 2018, 2019 and 2020 as full years, of course. But in any case, there is a certain consistency with this kind of strategy, and there is also an important drawdown. So we can clearly see that more than once we have reached a peak of $20,000 of drawdown, and most recently also $40,000 or more as a maximum drawdown of the strategy. By the way, both the long side and the short sides are good, even if the buy and hold of the Bitcoin is bullish. It's mainly bullish, but it has had some bad periods in the past where there was a bearish buy and hold in this case. And the average trade on this contract is quite high because it's more than $1,000, but I expect also a high slippage on this kind of very volatile, extremely volatile product. So I think it's better to keep a higher average trade than a lower one. Unfortunately, the number of trades is of course quite low, but this is due to the limited amount of data we can have on this future. And finally, here we can also evaluate the consistency of the strategy analyzing the annual period analysis, and we can see clearly that both 2019 and 2020 had been very good years for on this kind of product. And for what regards 2021, we cannot express, so we cannot say anything just because the amount of trades it's extremely limited, so we cannot say just anything about this year, even if it has started quite well.
Okay, let's take a look at the rollover calendar now. Next week there will be energy futures to roll, crude oil excluded because we have already rolled it during this week, and finally on January 29th there will be the expiration of Bitcoin futures. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.